Good day everyone, welcome back to my channel. Today's video is going to show you a really easy strategy you can use on all the synthetic pairs. Doesn't matter which pairs you are trading, it can be boom and crash, it can be DEX, it can be jump, it can be VIX, anything that you are trading, this will still work. Alright, so let's get straight into the video. Alright, so the first thing we look for, we're going to, the market needs to play out so that you can see what's happening in the market. So the strategy that we are going to use today is literally going to be a really easy one. You can use it on all the pairs like I mentioned, but the main thing we need to look out for this strategy is definitely going to be where liquidity is swept, okay? But the main thing is on a higher time frame, point of interest, and then you go to the lower time frame to find your entry on an order block or fair value gap with a liquidity sweep. All right, so let's say for example, on this one, as you can see, we have our highs broken here. This is the higher time frame. So higher time frame came down. We broke this low. Price didn't break this high again, so this was not a liquidity sweep. Price broke again. So now, for example, let's say price broke this low here, and there was an order block or a fair value gap here. What I would wait for is when we go onto the lower time frame, I want to see something like this. Market is going up, down, and then a market structure shift. So this needs to happen inside of here on the lower time frame, if that makes sense. On the lower time frame. All right, so that's what needs to happen. Higher time frame, point of interest, and then on the lower time frame, you wait for liquidity sweep, enter your point of interest, market structure shift, and then we target, for example, the next low. Awesome. So let's go straight into some chart examples and I'll show you how it looks. All right, everyone. So as you can see, we are on the jump 10 index on the 1 hour. I'm going to show you what I mean by higher point of interest. And then we wait for that setup on the lower time frame to form before we enter. So as you can see, we made a high, low, and there was a huge impulse move. So what do we have here? We have an order block here that's resting here. Price still needs to come up and retrace to that order block. So let's see what happens here. So this was our low that was created. This was our low, relative equal lows. So in this scenario, we have liquidity resting down here as well. Awesome. Okay. So let's quickly have a look. So price broke this low, came down. So if I take it from this high to this low, where's my order block? We have a big order block here. If you want to refine it, you can refine it to that candle there. So now, as you can see, yes, you can enter from this order block there, and you can put your stop loss above the high, and then you can target the low that was created there. Yes, you can do that, but if you want to be a little bit more conservative, or how I trade, I would wait for price to come to this area, then I would go for to the lower time frames. Now on this time frame, yes, you can see before price tapped into this point of interest, the order block, liquidity was swept. We had a shift in market and we had a fair value gap with an order block there above. So let's just make it a different color. So as you can see, order block and fair value gap, liquidity swept. So if you don't want to enter here, if it's too risky for you, wait for the liquidity to happen, wait for price to sweep the liquidity, enter your point of interest, wait for the impulse move, and then wait for the retracement. And then you can take an entry that looks something like this. So this is just a little bit more extra confirmation on the entries you can take. And then you can either target that low there, because there's liquidity, that low there, liquidity, or you can just target the lowest low there. And as you can see in this example, price went straight into it. So that's the first one. Okay, so let's delete everything. Let's see we didn't see this. Okay, price came to our point of entry. Now let's jump to the 30-minute. Let's see if we see something. Here we go. So now we can see a little bit better. So now we can refine that order block a little bit there. There we go. As you can see, perfectly it filled the order block. All right, so now we're on the 15-minute. Now we can see the same thing. It entered our point of interest. Before it entered our point of interest, price, if we see price is in a downtrend, this high must not be taken out. So in this case, it was perfect. So as you can see, we took liquidity here. Cool. We had our market structure shift that happened here. Now there's a few ways where you can enter. Now, as you can see, remember 1, 2, 3 up candles is the same as one order block. So there's your order block. Price didn't tap into it. But on the 1 hour, it was in a fair value gap. So let's quickly go to the 15-minute to see if we can see something. So you can use top-down analysis to get the perfect entry. Okay, liquidity was taken. Now we can adjust it here as well on the lower time frame. Liquidity was taken. There we go. We had a market structure shift. Remember, we didn't see this on the higher time frames. Let's just delete this one quickly. Let's see what's happening. We have a big order block there. This order block here was the last order block that broke this low here. So now you can use that order block there. As you can see, price came in and you can literally enter your trade from here. Stop loss above the most recent high, and you target the low, the next level of liquidity. As you can see, that's a beautiful 3 risk to reward trade. Now, let's say, for example, you missed that trade. Okay. So now we're on the 15-minute. Okay. Same strategy. Okay, we entered our point of interest. Did did price take liquidity? Yes, there we go. Did we have a market structure shift? Yes, we did. All right. Can we see an order block or a fair value gap that's nice and clear? No, not really. Let's go a little bit to the lower time frames. Let's go to the 10-minute. Let's see if there's something now. We had a nice fair value gap that has been tagged in. We made our push. All right. Let's go to the 5-minute. There we go. Now you can see something here. So we had a nice, as you can see, there's a big down move. All right. We have nice highs that's being created, lower lows. Let's just adjust this. Okay. This was the last nice order block that took out this high, this low, sorry. That one there. You can always just refine it. And where's the most recent high before that order block? It's going to be this one here. So your stop loss you can put literally above this high there. So let's say you didn't enter there, but you entered here. All right. Now we have a nice trade, stop loss above there, and we target that low there. And that's a 3 risk to reward trade. So even though you didn't enter there, but you got your entry down here. All right, so let's quickly look at this example. Now we are on the step index on the 1 hour. I just zoomed out a little bit so that you guys can just see. So as you can see here, this is a difficult one, so that's why I'm showing it. As you can see, where did price react from here? Where did price react? You see there's a huge down move there. You see there's a huge down move there. Now, why did it react from there? Let's quickly drag our trend line and we move it to the side. Let's see what happened there. All right, let's quickly zoom in. As you can see, we were in a fair value gap here, and we had a big, nice order block there. So fair value gap inside an order block, that's why price reacted. So let's go back. So we're still on the 1 hour. So what happens when price touched our level? Huge impulse move. All right. So because it's like on a huge time frame, I won't necessarily just enter there. I would first wait for market to tell me a little bit of a story. So we reacted from there. Okay, so let's go back. Okay, price made a huge down move. It was in a point of interest. Price did take liquidity. Remember, we're seeing this now. We didn't take this trade. We are literally looking on what's happening. Price came down. We had a market structure shift. The reason why I'm taking that one is the last fractal low. High, low, high. All right. So the candle on the left and right is higher than the candle in the middle. Okay, so let's quickly have a look. Let's go down to the 30-minute. There we go. So as you can see, price took liquidity. Now we waiting for the retracement. Now what do we have? Okay, so we have our market structure shift here. What's above the market structure shift? There's an order block there. So let's see if we can refine this order block a little bit on the lower time frames. 15-minute. There we go. Now we can refine it a little bit. You can either take that one there, or what you can do as well, you see this whole block, you can define it as an order block because there is two up candles there as well. So you can use the low of this candle and the high of that up candle to define as an order block as well. And as you can see, we have a nice fair value gap as well. Remember our strategy, fair value gap or order block. Let's just change the color. All right, so as you can see, price came in. What happened when it touched our fair value gap? This is on the 15-minute. Price reacted. Never got a market structure shift, so we're not looking for sales yet. But what did price do? Price created liquidity there as well. You will see what we're going to do there now. So now we know, all right, liquidity is there. Let's quickly go back to the bigger picture where we started. So price had this big down move. Liquidity was taken, market structure shift, and you can enter on two positions. It's going to depend on you, how big your risk management is. If you're going to enter from an order block, a fair value gap, or are you going to enter from the order block? Now, nothing is wrong. If it's a big fair value gap like this, I like to either enter from the 50% of the fair value gap. That's going to be more or less here, more or less. So I would take the entry from there. Or alternatively, if you want to be more conservative, I would literally take my entry at the order block, put the highs above this high here, and then I will target this low. And that's a nice 5 risk to reward trade. if you took your entry from here, it's going down to a 3.2 risk to reward trade. And then if you took your entry at the beginning of the fair value gap, it's still a really good trade. Just bear in mind you have a bigger stop loss and it's a 2.2 risk to reward trade. And that's how you can literally enter by analyzing on the higher time frames and entering on the lower time frames. So enter on a higher time frame point of interest. You wait for price to there. Then there's three rules. Liquidity needs to be taken. You need to have a market structure shift, and then you wait for that impulse move, and then you enter from a fair value gap or the order block. This works on all the pairs, like I said. Go try it out and let me know what you think in the comments. Awesome. Thank you so much. Cheers. See you in the next video. Bye.